The Magnificent Seven stocks no longer trading as a monolith, and the gap, well, it could widen in 2026. Mackenzie Sagalas joins us now, and she will explain. Mackenzie.
Hey, David. So there's roughly a 60-point spread in the Mag 7 year to date, with Alphabet leading the pack and Amazon in last place. And that divergence tells you what Wall Street cares about. It's now rewarding companies that show monetization and margin. Leading the pack is Alphabet. It's pulling ahead because it owns the full stack: AI chips, cloud infrastructure, distribution, and search. Bringing chip design in-house is margin defense in a world priced by NVIDIA. And you can see it in the results. Google Cloud grew 34% last quarter, with margins now near 24%. And NVIDIA, it is winning too, up nearly 40% this year because the AI CapEx wave is still landing on NVIDIA silicon, with Blackwell ramping and capacity effectively spoken for. Now, at the other end of the scoreboard, Amazon is at the bottom of the pack. It's been betting on its in-house Trainium AI chip to win on cost, but AWS revenue is only just reaccelerating. It's still trailing Azure and Google Cloud on growth rates and behind Microsoft on backlog, without a must-use model or consumer AI product pulling workloads onto its stack. Now, Meta also in the laggard bucket. It had its biggest single-day drop in 3 years after raising its CapEx outlook. But without a cloud business to monetize that spend directly, the AI payoff story is mostly about improved ad performance. And then there's Apple, sitting out the arms race entirely. But if models converge on quality, it's distribution that wins. So Apple doesn't need to train the models. It just needs to be where people use them. That's the upside case for 2026. And if you want to know where the AI trade is really working, look beyond the Mag 7. Some of the biggest winners this year have been the boring picks and shovels, memory and storage names like Micron, Western Digital, and Seagate. Guys?
Yeah, we've mentioned the divergence and the fact, frankly, as you pointed out, Mackenzie, that Apple and Meta, obviously Amazon as well, Microsoft, all trading below the return of the S&P this year. So, as you've indicated as well. And so that it may continue next year. We'll see. Obviously, NVIDIA is one of the outliers, and Alphabet, wow, that stock has been incredible.
It really has. Off the back of its in-house chip program, the TPU has a really strong reputation versus names like Trainium. The Amazon in-house chip hasn't done as well with some of these, some of these contracts, which is why you're seeing new business go into Google Cloud. The other thing I'll say about Meta, it's a very interesting story there. They are spending in the range of what Google and Amazon are paying, but they don't have a cloud business to justify that spend. So a lot of that coming back to what they're able to do with ad optimization. Llama, their LLM, not as popular as Gemini. Another win there for Google, part of why it's done so well this year. Gemini's at the top of the scoreboard.
Yeah. Now, you hit it all, of course. Yeah, that Meta thing is fascinating. Again, key being the spend is so similar, and yet no cloud business to amortize it over. Mackenzie, thank you.